welcome to the Real Estate Show. I'm Pete Belcastro for our live show on December the 8th of 2015. Here we are, look at this, the end of the calendar year of 2015. And well, tonight's show, we're going to take a little look back at a little bit of 2015 and see what in the world did we just go through and hear about what our guests think about what might or might not happen come the next year. Because certainly the real estate market throughout Jackson and Josephine County included in here for December, I mean, it's still a pretty robust market in all areas except one particular area that we'll talk about later. Before we start our show, we want to just say one thing here tonight, and that's one of our greats, Bob Gervais from Remax Ideal Brokers, died this last week. And you know, Bob, for 5 years, every month came down to this studio and sat with us here and shared his great real estate expertise with us, and came to KMED Radio so many times and did radio shows with him. And Bob, we're going to miss him, and I think our real estate industry in Jackson County lost one of our giants in Bob Gervais, and our condolences out to Bob's family and all the Remax brokers and those who worked and knew Bob a lot. We will miss him very, very much. Well, on to the show. I know that some of you guys may have known Bob, and we did shows with him. I mean, in here, Brad Bennington, the CEO of the Home Builders Association of Jackson County, is with us. Guy Giles from Ditech Mortgage, and Jeffrey Nagel, who's a real estate broker with John L. Scott's, joining us here on the show tonight. I know you knew Bob. I mean, Bob was a great guy, wasn't he? We were going to miss him a lot. He's one of the giants.
Yeah. Bob's a one-off. You know, there's nobody that's going to replace Bob. We're gonna miss him a lot.
Yeah. It's one of those things, isn't that? And that's always tough. Well, anyway, welcome to the show tonight, guys. On a happier note, I suppose, tonight. It's been an interesting year, hasn't it? We've got some statistics to share with you from that year to go and what's happening exactly in the market here. But Jeffrey, start us off here tonight. What you look back at this year? What the market's done? What do you think?
Well, it's been a good year. The market's been going up and up and up, and it's been interesting to watch as the inventory has been going down and down and down. We've got certainly a lot of buyers and not nearly enough sellers. We're seeing a lot of pressure on our local market.
Yeah, and that's driving up prices. I mean, we did shows with the rental market is the same way. The inventories are low and prices are going. The new construction market is going up. The demand is going there, and that makes Brad pretty happy, doesn't it, at this point? You had a pretty good year in 2015, home building overall.
Yeah, well, the home building, in particular, new home building is, you know, it's kind of our sweet spot, and anybody that's looked at that section of the industry would be very encouraged because, you know, if you wanted to compare our industry to a drag racer, you know, we just did about an 11.5-second quarter mile. I mean, it's put the throttle to the floor and go. I get calls from people every day. Can you find me some builders? You know, I want to build something. I had a guy call me today. He said, I've called 3 contractors. I can't even get them to return my phone call. Do you have anybody that can help me get my work done?
And that's been something you've been saying for some time. Yeah. There's not skilled labor enough in Jackson County to handle the demand that we're seeing going on in this.
That's right.
And it's obviously having an effect on what's going on. Well, all of that makes Guy Giles, who's our resident expert from Ditech Mortgage here on all things lending, that makes you pretty happy to hear that from Jeffrey say, hey, the market is obviously there's a lot of things selling, and then you hear Brad say, hey, you know, look what's happening in home building. You got to be the happiest guy in the room.
It's been going well. I came off a vacation yesterday, and I think I shut my computer down about 1 o'clock in the morning last night. So,
yeah.
Wow.
And I'm up for it again tonight, I guess.
What's going on with it? Tell us what's.
People are just buying houses. I mean, it's all kinds of loans. It's not a ton of USDAs anymore, but people are. You know, I had a young lady come in tonight. That this is her first house. She's already came with a realtor, man. Or I'd hook you up.
Good enough.
But anyway, she's just, you know, I don't know. She's got all her ducks in a row. I'm just seeing a different group of people right now than I did a little while back. You know, it's not. I want everything, and I want the most expensive thing I can afford. I want to get into something that I can afford, and I want to, you know, not be stupid about it. And I don't know. I'm just seeing just a whole different crop of young people coming in. Lately, it's been a bunch of younger people buying things.
That's really interesting, isn't that? Yeah,
it's kind of fun to see. They're doing all the stuff right. A bunch of the mistakes we made, they're not making.
Well, one of the things that Guy is talking about that's important is he's talking about people coming in with their ducks in a row. When the market's as fast as it is, if someone thinks they want to get into a house, we really need them to come in and meet with the lender and have all their paperwork together. that makes that process so much faster for them.
As soon as Guy was saying that, that's exactly what Lennox Scott, the owner of John L. Scott, was saying. That it's called market ready day one. You better be ready with the loan. You better be ready with an offer. I mean, we had a client actually just this week, and a $250,000 house was on the market 2 days, and we were the fortunate ones to be the first one to get an offer in, and they accepted it. So it's really interesting what's going on out there across, in really all areas of the county. There really isn't, I mean, there's a little lag here and there, but it seems like it's happening all over. Yes?
It's
Yes.
slammed. Yeah, and ducks in a row thing, that's one thing that we're doing right now is kind of cool, is we're fully underwriting people with an underwriter at all the pre-quals that we're doing. So we're trying to get one step ahead of that with all the new TRID and all the extra days everybody's tacking on these loans, trying to figure out a way to shave a couple off. And that's one thing we're doing with all of our pre-quals that we're bringing in. We're having an underwriter actually underwrite those loans while they're looking for a
Is all
property.
this trying to speed up the process to get
Yeah.
everything closed
Gotta make up a little time
quicker
somewhere.
and that kind of thing? Yeah?
So yeah, and it's busy. There's
Yeah.
no doubt.
Well, that's good to hear. Brad Bennington, new construction.
Yeah.
What has been, I know a lot of what's going on in East Medford, and you know we have some builders that have come with us and shown
Yeah.
us some of the properties that are out there in the $1 million range. I mean, they're really all over the place. Tell me what you're seeing in terms of what is being built right now, and what segment of the demand is being met by this?
Yeah, the cheap. We've talked about this before. The cheap stuff is gone. And the old joke goes, you got a guy, and he walks into the grocery store and he says, "How much are your tomatoes?" And the guy says, "Well, they're $1 a piece." And he says, "Well, the guy down the street, his tomatoes are only 75 cents a piece." The guy says, "Well, how many does he have?" He says, "Well, he's sold out."
Didn't have it, yeah.
Yeah, so that's where we're at with buildable lots. So the good old days when you could go in and find reasonably priced dirt, those are over, but there's still really good bargains out there. As far as the actual process of building, it's the sad news is home construction 20 years ago was a basically unregulated industry, and now it's one of the most regulated industries out there. And regulations add cost. I don't think that they add value, but they add cost. So the fights that we fight and the issues that we work on, especially me at the policy level, is we try to work with our legislators and regulators to keep these regulations as reasonable as we can, to hold costs down, to make housing available to more people. One of the things that's really sad is, and we're all Oregon guys here, we grew up here. And the thing is we'd like to have a situation where the kids that grow up here could afford to live here. And right now that's really touch and go. But the more of these regulations that we can work on to make housing affordable or keep housing more affordable, the better likelihood there is that our kids are going to be able to grow up here and stay here and buy the houses that we build here.
I'm concerned though with a shortage of skilled labor, that what we're building is going to be the big, expensive, the large places that those people couldn't afford those anyway. And that's what concerns me on that kind of thing.
Pete, it's a huge concern. It's one of the things that we work on all the time. And the reality is, in our community, people can come here from outside of our community and they have more vigorous financial resources,
Yes.
and they can do things that the local people can't.
Yeah.
So this is really an important issue for us to work on.
And that seems to be driving a lot of the new construction market. Is that accurate? Can I say that? Is that accurate, do you think?
What's driving the construction market is just supply and demand. Southern Oregon is a desirable location. People want to come here. People want to live here. They're coming here, either people that have good jobs here, for instance, people in the medical industry,
Yeah,
right?
but no, I know. Yeah, I've sold. That's true.
But the kids, but a lot of our kids that are
it's
growing up
everything,
here,
isn't it?
yeah, those houses that are under 250 grand are getting pretty hard to find.
And
aren't
coming
they?
here with a job is really a big thing too. Jay, you had something to say there.
Well, yeah, I think the regulation, as you say, it is a tendency to not always add value. The flip side of that is, I'm in escrow right now with some folks who are buying a house built in the 60s. One of the interesting things is there's no insulation in the floor and hardly any in the ceiling. So, yeah, they can buy the house at a reasonable cost, but their heating bills are going to be astronomical. And that's another one of the pressures, I'm sure you see this, is we're seeing a lot of contractors who are now going back and doing retrofits as those
If you can find a
Right.
contractor right now to do the retrofits, that's the
issue.
problem, isn't it?
They're booked
Yeah.
out months in advance.
Well, we had Elite Maintenance. Will Waite has been on our show, and they have a number of contractors who work for them, but they hire them year round, and they're hiring with them. So it's really a shortage that eventually is really going to cause the market. I would think a lot of problems maybe in 2016. Who knows? Does that make any sense? Am I making sense to you?
Yeah.
Guy Giles? Because you have to loan on these things, and new construction. I mean, tell me how the new construction loaning world is.
It's nice. I mean, the only real downside to new construction loaning is you have what's called early issue title insurance, and you don't really know, just in case there was I almost said a logger, a plumber or somebody on the house, you want to make sure that there's no liens on that house when you get done. The other part is you don't really know what the house is going to be tax assessed at. So they have what's called a millage rate where they, if there's some other comparable ones right in the neighborhood, you can kind of tax it on that. But I mean, it's really not much different. We actually like new construction to loan on because you're not going to worry about that appraiser calling out something.
It's easier to loan. Is it easier to loan on new construction?
I love them. I really do. Yeah, it's not bad. Like I said, the person might be in the hole a little bit over the first year, over a little bit, heavier taxing than they would actually be taxed on the place because because they don't know what that house is going to be. You may only be paying, a couple $100 a year for taxes because it was last time it was assessed, it was a bare piece of land. So
and the county assessor who's been on our show warns people, by the way, you have until December 31st to file an appeal on new construction if your property is assessed you believe too high.
Yeah.
You better do it because once it's set, it's not going to go down.
No, it's true, but no, we love new construction as far as that
so that's
goes,
an easier thing to loan. I'm concerned in new construction. Then I'll get off this topic, but that Brad, they're not building enough of the things that are affordable for most people in that 200,000 range. Are we out of that range right now? 200 to 250
Pretty
in
much.
new construction?
Yeah, and and the thing there is that it isn't contractors making more money or more profits. There was a report that was issued last May. It was by a couple of statisticians in UC Berkeley, right?
Okay.
UC Berkeley, to determine what the primary drivers were on housing costs. And miraculously, both of these UC Berkeley statisticians came up with the fact that it's regulatory oversight more than any other factor that drives housing costs.
When you say regulatory oversight, you're talking about systems development charges and additions added onto it, or because that's I guess regulatory. Is that part of what you're talking about?
Well, SDCs really aren't regulatory. SDCs are based on the idea, which is kind of reasonable, that once these houses are occupied, you're going to have more people using the roads, more people using water, more people using storm sewer, and so all that has to be paid for. Regulatory oversight comes in there somewhat, but mainly it's the rules that we have to operate under. For instance, one of the biggest drivers when it comes to land development is complying with all the EPA regulations. Did you know that the EPA has promulgated over 20,000 rules in the last 5 years?
I wouldn't doubt that. No, I believe that,
4,000 rules a year is the clip that they've been running at, and we get to comply with all of them because these are regulatory. They're not statutory, and they're not appealable. So we have to,
those are my favorite kinds, by the way.
Talking,
I love that kind of thing.
yeah.
But, so it adds
talk
cost.
about right. It adds cost, and we have no choice. We have no discretion. We have to comply or else, and we have no way to deal with that except pass those costs along to the consumer.
Yeah. It always ends up being passed on to the consumer. Well, we have some statistics to share with you from the Southern Oregon Multiple Listing Service. So let's get to those and just kind of show you what's going on around. But before we talk about this, we let Brad have the opportunity to talk about the Southern Oregon Home Show coming up in February. So, okay, this is it. This is the big show of the year.
This is where you want to come. Anything and everything to do with the home, it's there. Doors, windows, contractors, floor coverings, finishes, you name it, we've got it, and we've got lots of it for you to look at.
Are people signing up for booths? You're getting them now?
We're 50% sold out already.
No kidding, in December. Look at that.
Yeah, we're 50% sold out already. So anyone who would like to be in the home show, get a hold of us pronto.
Brad's email address is right there for you to get a hold of him. So it's going to be a big event, February 19th, 20th.
Thousands of people come. It's great. Yeah. They love it. The community just loves this event.
It is.
And
it is.
Pete and Joe are going to be there.
We'll be there every week, every year. We've been there with you.
Maybe we can even get Guy to show up. I don't know.
Could be. All right. Let's go back to these stats here and show you a little bit about what's going on. This is my favorite slide of all because Jeff Nagel and I, when you're with John O. Scott, we get these things drilled into us from our wonderful principal broker Jim Remley. But let's look at what November over November stats and pending sales. We were talking about pending sales up and new listings are still up. But again, the gap you're seeing is that get it right, and give you right, Jeffrey. The new listings are not keeping up with the pending sales, so the gap continues to widen, right?
Right, they're selling faster than they're coming on the market.
And that has been this way now for some time. Days on the market, look at that. I mean, it's less than 50 days. This is overall in Jackson County. And the list price versus sale price, I mean, it's almost 96% that people are getting right now. Then you get into the negatives, and this is what we've been talking about as we watch these statistics month after month, is the available supply of properties per 2 persons, and the monthly supply is 2.9 months. And you can break that down even further, and that really shows you a lot. Here's the existing home sale from September, the 3-month period that the last this year and last year. You can see the median price is up, and everything is everything is up, isn't it? It's very interesting. We go there. Here's new construction. As solid as it was a year ago.
So Pete, my eyes are kind of bad. What is that? Can you read that bottom line for me? Up how much from 2010?
38%.
Oh, is that what that says?
The median
wow.
price.
Okay.
I mean,
wow, 38%.
That's considerable,
Holy
isn't it?
mackerel. Yeah. What does that tell you? That tells you a lot right there.
It tells you that the new construction market is active,
yeah.
And you start breaking those down. Where you see
hotter than bacon off the grill.
Speaking of hot, I mean, look at rural property sales in Jackson County, and again, these continue to the demand for rural properties continues to to go up. So does the median price. I mean, so. We're seeing in all areas. I mean, in terms of acreage sizes, and that
what
demand.
What could be driving that, Pete?
Can't wait till we got to get Randy White back in here from the Jackson Soil Water Conservation District because, the things that are driving it are obviously water issues, but legal marijuana, GMO-free county, vineyard land. It is just the demand that people want. Don't you see that, Jeffrey? I mean, I hear that. I have clients. I love this. I mean, I love this kind of property.
Absolutely. In fact, we're seeing a lot of clients coming up from California who are literally saying they're worried about the drought, they're worried about water, and they see this as golden territory. Yeah. This is a lot like California was 30 years ago.
5 acres out in rural Josephine County those are really, for that type of client, those are really properties that people want. It's driving the market is what we have seen. Let's continue on for just a little bit here and just show you a little bit more here. Closed transactions over this 3-month period. You can see the market at 90% regular sales. And remember, 5.5 years ago when we started our shows here, when Bob Gervais was sitting here with us and those kinds of things, it was almost like 75-80% distressed sales at that time, and no new construction at that time, as you well know. Here it is for Josephine County again. It's the same thing. It's kind of going up. It's turned around in Josephine County as well in terms of the median price and numbers of solds. New construction, they're getting some, Brad, not much.
A little bit.
A little bit. It's beginning to come back. Distressed sales, are still low. But look at the rural property sales again. They're really up in Josephine County. I've got one of those myself in here, a wonderful property. All homes on the market in Josephine County as well, you see. The distressed sale area is just about over. Anyway, you can always catch us there on KMED at 11 o'clock on Saturday mornings, and we appreciate you there as well. So those are some of the statistics that are going on there, and it's the gap, I guess. It's that you can break. Here, I've got the question for you. I've already told Jeffrey he knows the answer, but these two brilliant guys. You can break down those categories, of available homes, in the per month, for buyer, and what do you think is the least available inventory overall in Jackson County? What price range would you say that would be? Just take a wild guess.
Are we going within $50,000
increments? It doesn't matter.
I would say anything under $200,000 is probably not impossible.
Between $150,000 and $250,000, there's a less than 1 month supply of inventory in that price range.
We're still selling them though, so
they're going. I mean,
that's crazy.
Like I said, we just had 2 days. It was gone. I mean, this kind of thing.
Yeah, you got to jump.
That makes sense. But with the other interesting category, as you look at this thing, was what was the area, the price range that had the biggest reduction in, let's say, the last time it was a 10-month supply of inventory, now it's a 3.8 month supply of inventory. It's dropped considerably.
It's going to be a trick question, man.
It is a trick question.
Sounds like a trick question.
He's trying to stump you guys.
It's the higher end. It's
I was going to say that, but just because you tricked me.
$550,000 to $750,000. That part of the market
Wow.
is very active right now, and things are the supply and demand. I mean, that's what's happening there. Very interesting as you look at them and see where. I'm always curious as to where people are coming from and how they're financing these things. And
What I'm gonna since you brought that up, I'm gonna throw something out there. And Guy follows numbers a lot, but what we're seeing nationwide is we're seeing money do funny things. So certain things have intrinsic value, right? So money is worth what you can buy it for. But when you see things, taking more and more dollars to buy, for instance, we're getting a lot of out-of-country money parked in the United States real estate. We've got a lot of out-of-state from Oregon, as well as out-of-country money.
oh, absolutely,
coming
yes,
in.
it is, absolutely.
And that's messing with our market. For instance, the marijuana thing has caused a lot of out-of-state buyers who, under other circumstances, would never come and buy property in Oregon. They're here buying property,
I think so.
right?
I think so. Yeah,
a lot of those folks are bringing cash.
And they're bringing
cash.
Yeah. So
It doesn't make Guy happy,
no,
but
I'm not loaning on those
and what that
properties, so we're
does is,
good.
and that skewers the market too with those cash buys.
It's messing with the market. But you're seeing, across the nation, you're seeing records being broken for cost per whatever you want, cost per townhouses in New York,
Yes.
apartments in Manhattan, because the value of the dollar is just getting kind of wiggy, and it's like, and people want to park their money where they feel they can at least have some stability.
Have you seen foreign buyers? I mean, have you ever loaned? To a foreign buyer? I know it can be done, and it's easy to do, but
Yeah, I've had a couple coming in. I mean, it really comes down to what country they're coming from, whether or not we have trade issues with that country. But yeah, you can loan on them. I've done it very, very rarely,
very, very
to
rarely.
be honest. Yeah.
I wonder over time if 2016 is going to be a year where you're going to see more of that, because the foreign buyers are obviously here. I mean, I've heard of today they were from a couple from Thailand was buying a property in this valley as a second home.
Well,
So it's ever.
Go figure.
As all the
figure
borders,
that one where it
Money
comes
comes
from.
in.
Money comes
Yeah.
from.
Yeah.
I mean, as all the borders are getting crashed over in Europe right now, people want to know where to put money, and I don't think that they feel really good about a lot of the European nations. So I could see a lot of money moving over here.
Yeah.
So-
and real estate would be a wise investment.
Yeah.
I mean, it still is. I mean, I don't think
It's interesting. We tend to think of real estate as a local market, but as these guys are describing, those national and international issues can drive and change the prices here in the valley.
Well, we saw it in Lennox Scott when he was here. He's coming down again this year, but I remember when he was here last time, that was one of his big things was foreign buyers are already invading the Seattle, San Francisco areas, and they're driving these prices up. I mean, look at San Francisco was $1 million median price right now, and that's being driven in part by foreign buyers as well. So it's going to filter. It's going to filter to us. So are we ready for that? Are we building the right kind of housing mix? And how do we even know that? Shannon Putras, who was she was a real estate broker with John L. Scott, was on our radio show. She's on the Medford Housing Commission. And so we were asking her questions, about some of these things. Are we building the right stuff? What about apartments? What about making it easier for additions and duplexes and things like that?
Well,
I'm worried about. I don't know.
Yeah, builders build to the market, right?
But they're building right now. Absolutely, they are. I understand that.
Right. So you don't build things you can't sell. You build things that you think that you can sell. So the underserved part of the market, for instance, we know that a month and a half ago, Portland declared a housing emergency because the cost of housing up there, which oddly enough, Portland Metro controls most of the rental housing in Portland. So they kind of declared their own emergency, I guess.
Yeah.
But builders build to the market. They don't build where the market isn't, they build where the market is. So if that market is leaving the people behind that need other housing, then that's a different discussion. So maybe you're kind of talking about the Jackson County Housing Authority.
Well, I was talking about are we building? I mean, if we're building $1 million places up here, and we're not building $200,000 to $250,000 new construction, or we're not building multiple family units, or we're not building low income housing. A mix of this, I guess, or even tiny houses. I've heard people trying to do that have been unable to do that. It's the mix of things, I guess, and who's in charge of that? And there's nobody. I found out there's nobody really in charge.
Listen to what I'm about to say, because I'm as serious as a heart attack when I say it.
Well, you're on the planning commissions. You know more about this than everybody here.
Unfortunately, yeah. Here's the truth.
Okay.
The truth is that the cost of housing here in the Rogue Valley is going to continue to go up faster than the earning rate of our young people, and there is nothing we can do about that. It's being driven by regulatory pressures that we have no control over.
Nothing we can do about that.
I'd be curious. I grew up in Sonoma County, okay, all those many years ago, and I remember my folks bought an old horse pasture and then put wine grapes on it, and I watched as the wine industry exploded. And my dad was a school teacher. He could afford to buy 16 acres. Well, a school teacher can't buy 16 acres today. The wine industry really helped increase the property value around there.
Right.
And I'm thinking about
And people made money on
well,
their
absolutely,
property
which was
and
great
the
if
value,
you,
which
if
is-
you
which
owned
is
property.
okay, yes.
It's fantastic.
Right.
But I'm thinking about the pressures on land right now in Jackson and Josephine County,
Yeah.
and how
Oh.
and how even if you wanted to build that affordable family housing, the price of the land is so expensive. It doesn't make sense if you're going to spend, $200,000 on a lot to put a $50,000 house on it.
That's what he's been saying.
Bingo.
There it is.
That's what he's been
Bingo.
saying.
It is.
You've been
Yeah.
telling us that's the very thing.
Yeah.
That's exactly it, Jeffrey, and that's the problem. The main problem is the dirt.
Yeah.
And it was pretty cheap for a long time, as you said, and now it's pretty much not there,
Well,
or it's
and-
relatively very expensive.
And we could see, we're gonna have to see what happens with the new marijuana regs that we're looking at, but we might just see the fly go into the windshield all over again on land prices, depending on what happens with marijuana. We could have an unintended consequence where the availability to grow a high value crop winds up driving the land that is available out of reach. People will be able to afford that land, but it probably isn't going to be local people.
Yeah.
We may have that land, just because you can grow marijuana on it, driven out of the reach of our own population.
Issues then become water use, and it's taking water
Oh,
that's
my.
illegal for you to use. And,
Yes.
I mean, it just goes on and on and on here. Well,
It's-
we're almost out of time here. I'm just
it's a
curious
big
as
deal,
to
yeah.
it is. It really is, and I think that maybe we're the only ones who talk about it around around our show tables. But I get with people and you start talking about it, and they say, "Whoa, I never thought of that." I mean, they just don't know what's happening around us. So. But change is in the air no matter what. Just look ahead, because we won't see it till the new year. It's going to continue, isn't this, for some time? I think. Don't you agree? Or tell me what your thoughts are.
I would absolutely expect this to continue. I think that we've got a huge backlog of buyers who are waiting to enter the market. They're folks that were part of those distressed home sales
Yeah.
3, 4, 5 years ago, and the clock's been ticking. They're now ready to enter the market again. Those folks are going to be joining us. We've got pressure coming up from other states. We've got the whole green rush with marijuana. I expect to see home prices continue to go up.
Yeah.
Yeah.
And interest rates, Guy Giles. I mean, 2015 was still a fabulous year. We sat here a year ago, say we were going to go up. They really didn't go too much. This next year could change all of that, huh?
Yeah, I don't think they're going to go up a lot. I think the Fed
Yeah.
will raise rates. They're going to have to a little bit. They got no ammo in their little pistol right
I
now.
hope they don't,
but-
because all of, but anyway.
Well, I think it's already kind of baked into the rates. When the Fed kind of came out about 3 or 4 weeks ago and said that they will probably raise rates this month, we had kind of a reaction, and it's calmed down from there. I mean, I think the smart investors know that we're not out of the woods there yet, but they're literally just doing it so they have somewhere to go if they need to again.
And most of what you see are still conventional loans being the norm,
yeah.
pretty much the way. FHA is still,
Yeah,
you still
I mean,
but
FHAs, I'm
Still
doing
there.
some of those. If your credit score is not perfect, an FHA,
That's the way
is
to
a
go.
pretty good way. But if you can beg, borrow, or steal another 1.5% and get into a conventional one, I try to be like a one loan person. Get you into the right one the first time, because who knows what rates will be 4 years from now when
Yeah.
you decide to refinance it. So if I can get them into conventional, I do.
And it seems like that's the trend that we've seen this year, because we haven't talked much about some of the USDAs and things and that kind of stuff. And even with my clients, I mean, it's kind of, I'd rather do a conventional loan. Well, great, okay, perfect. We
Yeah.
like that.
Yeah. It's
Okay.
where I'm not doing any USDAs at this
Yeah.
point. Literally haven't for months.
And Brad Bennington,
Yeah.
same thing. I mean, this was a good year for your industry and for your association, I might add, and the wonderful things that you got planned ahead in 2016.
Yeah.
You-
The thing that I would tell to your viewers and listeners is this: we're not a growing industry, we're a recovering industry. So we're still substantially below baseline, right? So in a normal year, nationally we used to build 1.2 million units average.
Yeah.
We're still way below that. So,
That's true.
So get this picture, and Bob Gervais used to talk about this. Picture in your mind a gigantic rubber band, right? And you're pulling this rubber band further and further back, further and further back. When you let go of that rubber band, all that energy that you've stored is going to get let go.
Yeah.
And that's our housing market. We have a lot of demand that's been building up, building up, building up,
Yeah.
and it's all going to get let loose.
it's still
and
there.
So for people that can afford to buy, get out there and buy something. Your money is going to buy more now than it will later.
Yeah, that's really true. Well, we'll see what happens with it. Wish you all a wonderful holiday and good luck with 2016, and we'll see what happens. I think can't wait every year. At the end of the year, it's always interesting to look back and say, what did we say in this last show in December, and how in the world did it come out? And we certainly saw really a pretty good year. The
It's been a
offices
great
and
year.
brokerage, it's been, again, that's always good to see because it's a big industry. It's a huge economic factor in our valley. That'll do it for our first half of the real estate show. Stay tuned. We've got more coming up after this.
Thanks, Pete.
Thanks, Pete.
Yeah, this horse is saddled up.
And welcome to the Real Estate Show on RVTV, our live show on December the 8th of 2015. I'm Pete Belcastro, and thanks for joining us. Well, here we are at the end of the year of 2015, and it has been quite a year in the real estate business throughout Jackson County, whether you're in the broker business, the lending business, the new construction business, obviously, trying to, whether you repair things, inspect things, appraise things, 2015 was a good year. The lending part of it is something the Rogue Valley Association of Realtors, which sponsors part of our shows, wanted to talk to you about tonight with, and that's different types of lending that's out there that people may or may not know even exists. And that's the subject of tonight here in segment 2 on the Real Estate Show. With me is David Sprague, who is a lender with Umpqua Bank.
Yes.
And nice to have you here on the show for the first time.
Thank you, Peter. Appreciate
And Matt Allen, who is a lender with Pacific Residential Mortgage, right?
Mm-hmm.
And so both of you, well, tell me just what 2015 was like. I mean, we're at the end of the year. You got to look back, and say, what did we just go through? And lending, we were here a year ago. Everybody was predicting, rates are going to rate, all that kind of thing. So you guys must have had a pretty good year. Is that right?
Yeah, absolutely. I mean, it's been a phenomenal year. It's, loans are up, people are buying, people are looking. We're seeing more and more people come from California and buying houses. We're seeing more first-time home buyers getting into the market, kind of realizing that prices are going up and rates are low, and now's the time to act. So it's been a phenomenal year for lending.
You're seeing the whole gamut of this.
The whole gamut, yep.
And just let me ask you in terms of price ranges. I always like to ask lenders that. What are the areas that, I mean, we always talk about, what's the available inventory as a broker.
Sure.
What's available, and we're seeing in certain areas is not much, and certain areas have more. How does that work in lending?
It's pretty similar. I mean, we're kind of tied to what's available for inventory. So, those lower priced homes that our first time home buyers are looking for are tougher to get, but we still are able to do the loans for them. As we're seeing more and more of that upper end inventory come back on the market, more and more demand for it, we're seeing those loans are becoming more and more available as well, with less down payment requirements. And
so I'm curious as to, and Matt, you both have been in the lending business for some time, and you both survived the Great Recession time in that world. Lending's really has lending changed that much? Tell me what's changed about it. That the biggest thing that's changed maybe about it that maybe consumers don't know.
Well, I think the biggest change, and Dave would be a better one to talk about it, is TRID.
TRID, which is the
TILA RESPA integrated disclosure.
Yes.
And we've had shows on that, so people understand that. Remember that we talked about this thing,
Yeah.
and it's in effect now, which is the Consumer Protection Bureau's. I guess, not decision, but rules. We talked about rules in the last segment of our show. Rules to protect consumers, right? I mean, but it causes the industry a lot of upheaval.
Yes. So for what I do, because I only do reverse mortgages,
we'll
so
talk about
I don't. TRID does not actually affect reverse mortgages.
It does not do that. You got. We'll talk about reverse mortgage here. We have not talked about them on our show. But how did you? I didn't realize that. That's all you do. I mean, specific kind of the demand in a reverse mortgage.
Right. It's a really unique product, and so it really does take a specialized knowledge about the product to educate the people, to understand what options are best for them. And so if you only do onesie twosie throughout the year, personally, I don't feel that you're giving the service and the education and what that people really need about the product. So that's why I decided to specialize in it. It's a unique niche.
That's pretty unique, isn't that? I mean, that's taking a risk too, isn't it? Is that taking a risk? You think?
If you look at both of us being in lending and we don't have any hair left, and for me, it has simplified my life significantly because I've got one product. And I know who I'm marketing to, I know who I need to be networking with, and it really helps me set me apart in the market, because if somebody calls and says, well, it's like, look, this is all I do, and that changes the whole conversation right there. So I'm really enjoying it, and I enjoy the people that I work with too. So.
Now, David, you don't do them. I mean, you're Umpqua Bank. I mean, you don't even touch those kind of things. Well, I know many lenders who don't. I mean, who say I don't do that. It's like real estate brokers a lot of times don't want to deal with a short sale. We'll let somebody else do that, and so that's the same thing that you would do with the reverse mortgage.
Yeah.
Well, that's pretty cool.
Yeah.
Well, reverse mortgages are interesting. We've not talked about them on our show. So just before we kind of get into this thing, but tell me when someone would want to use a reverse mortgage, because that seems to be the biggest thing that, if the topic ever comes up in a conversation, when would I want to do that, and should I use it? And I've talked with different clients over the years about these types of things in certain situations, right?
Well, there's a ton of different reasons, ton of different situations why you'd want to look at a reverse mortgage. When about half my business is purchase, so they're using a reverse mortgage to purchase a home, and half of it is refinance. The refinance aspect of it is what you would think. It's usually people that have hit a situation in life where they need money, whether it's they need to pay off their current loan, they've got too much debt, they're in divorce. There's just a variety of kind of bad situations that they're in, so they're turning to the reverse mortgage. What I would like to see is more people using it as a financial planning tool, because if you implement it the right way and use it as a tool versus a reactionary loan, it can be very powerful. So, like I said, it really depends on their situation on why they would want to do a reverse mortgage. I mean, everybody's got their own reasons, but usually it's because of some kind of life change.
Now, I've always heard, you tell me if I'm wrong here, because I believe me, I very well could be, but I've always heard that to even consider a reverse mortgage, the seller, I guess the homeowner, you really want to have it free and clear. Is that true? I should own it free and clear and not have a mortgage. Is that true?
No, a lot of my business is people getting a reverse mortgage to pay off their current mortgage so they can free up that cash flow, so they're not having that monthly payment.
To pay off my current mortgage, and so I would, do they have to have I mean, you can't owe very much on them, or does that? I mean, is it based upon the value of the property kinds of things?
It's a loan to value that's based upon your age. So the older you are, the more you can borrow. So
that may be about the only advantage of growing old that I've ever heard of.
Well,
you know that?
When I'm 62, I'm planning the first thing I'm gonna do is get a reverse mortgage.
Well,
so.
I'm getting there. That's interesting. I never thought of that. Okay, all right. The older I get, the more I can borrow.
Yes.
That's a heck of a deal. I like that. Yeah. Well, tell me what. Can you, not names or anything, but can you give me one example of when someone used a reverse mortgage that improved their situation? Because I am always for improving your situation for people if you can, and you have the ability to take advantage of these programs, and it would make your life better. And so I think there's so much confusion about it. So tell me what story, maybe somebody that you've helped, this has really done something for.
Sure. So I had a woman that came to me that had her husband had passed away due to a drug overdose. It was a class action lawsuit, and so she won a significant amount of money from that. She was living in a kind of a rundown part of a duplex in a bad neighborhood, and she wanted to get out of there. She wanted to own her own home and have her own yard and flowers and all that kind of stuff. And so she used the reverse mortgage to purchase a house, and so she was able to retain about half of the what she won in the lawsuit and put the other half down on a house, and she has no monthly mortgage payments, and she's only responsible for paying her taxes and insurance. So it's kind of, you look at that and it gets her, not only does it increase her monthly cash flow because now she doesn't have to pay rent, she's only responsible for taxes and insurance, and she's living in a significantly nicer neighborhood and a significantly nicer house.
And is much happier probably
much
in
happier,
your life, which
much
is
happier.
what this business is supposed to eventually do.
Right.
Well, that's interesting. Let's go back to Dave Sprague over here. I'm curious as to how loans, I mean, at one time, not very long ago, I guess on our shows, we've had lenders, been part of our show since we've been here, where everything was an FHA loan. I mean, like I think it was 97% of all loans at one time a few years ago were FHA loans. And it seems that those are kind of like disappearing. Are you seeing that? Or tell me your experience at Umpqua Bank, you're a big bank. What are you seeing?
Yeah, I mean, we're seeing more and more of the loans get away from FHA as our conventional lenders are opening
Stepping up, is that what you might say?
Opening up the guidelines a little bit, not being quite as restrictive. I mean, conventional loans with as little as 3% down, where previously you maybe only used FHA for a lower down payment option. Now there's other programs that are out there that are kind of making a comeback that, give them other options other than the FHA loan.
Well, it seems like the conventional loans now are, in 2015, certainly have taken well over most of the lending that is going on in the country now. Is
Absolutely.
that convention?
Yeah.
And who would have thought of that?
Yeah.
That was going to happen.
Yeah, I mean,
Yeah.
5 years ago, we didn't know if Fannie and Freddie were going to be around anymore.
Yeah.
What was going to happen with lending, and it's made a comeback. So
How has I know the mortgage insurance is the big deal with FHA loans, that they're making you have mortgage insurance for the entire life of the loan, correct?
Correct.
And that's driving people out of those loans because that's a significant amount of money.
Yes.
Right?
yeah, and we try as loan officers to explain that to the borrower that, FHA's got its advantages with maybe some lower credit scores, obviously less down payment, but
Wow.
there's the disadvantage of your upfront mortgage insurance premiums, your monthly mortgage insurance premiums that don't go away for the life of the loan.
Yeah.
Versus a conventional loan where you may pay that monthly mortgage insurance premium, but once you've gained enough equity in your home, you can request that private mortgage insurance be removed.
Yeah. When we bought our house, we had a conventional loan and had to go up with 20% down. And today isn't that the biggest driver to conventional loans? I don't have to have those big down payments.
Yeah.
Can I get a down payment from anybody, or are you going to go into my background and say where the money comes from or that kind of thing? Tell me how that works.
We have a lot of borrowers, maybe a lot of first-time home buyers that get a gift from maybe mom and dad or
Right.
another family member for that down payment. So conventional loans do allow for those gifts as well. That used to be a driver of FHA loans, but
That would-
conventional loans allow for that now as well. So mom and dad can help gift you that money to get you into the house. And it doesn't have to be something where we're digging deep into the person gifting the money
Yeah.
either.
And when you talk about the borrowers coming to you, earlier we heard new people moving into town, younger people. I mean, clients I've got are young couples. I mean,
Sure.
moving into town here. They have jobs when they come here.
Yeah.
That's the interesting part.
Yeah.
They already have a job when they're coming here. But there seems to be quite a bit of that. Is that what you're seeing in your loans, or tell me what you're seeing there?
Yeah, I mean, we're definitely seeing an influx of people from out of state that are moving here more and more. I probably deal a little bit more with the retired people moving here, so
Okay.
seeing a lot of people as home values in California have rebounded, selling those homes and wanting to move up here and retire. But we're
And
also
that-
seeing,
and you're seeing that though. I mean,
Yeah.
and they're here. And are they generally? I mean, are they paying cash for these? Some people pay cash for this stuff, and other people don't. I understand that. But you're seeing the people are borrowing, obviously,
Yeah.
to
Yeah.
do that.
If they're seeing
If they're
me-
seeing you, yeah, you don't like
Yeah.
the cash guys are not the ones you really want.
right, we
Yeah.
don't like the 100% down payment program. So
Well, it messes up the market a lot more than you actually think in
Yeah.
terms of appraisals and stuff.
Yeah.
That seems to be the one thing that keeping sellers right now in check is that, well, look, the house has got to appraise, and the prices are not going up as high, as
Yeah.
fast as maybe you think. And because if the appraisals still drive it, correct? I mean, is that what you warn people about, or tell me?
yeah, I mean, we don't see it quite as much anymore where we're seeing low appraised values or, appraisals not meeting sales prices.
Okay.
Occasionally you'll see one here and there. I was talking to a borrower today about it, that she was concerned that the home may not appraise for enough. And I was just kind of giving her my experience of the last couple of years where, I've probably seen one that hasn't appraised at what the purchase price was. You certainly get those that, they may be trying to drive value and increase pricing that, is a little above market.
Yeah.
But
Well, that seems to be
we're
the
not-
one driver to keeping sellers in check a little bit.
Yeah.
Is reality. You
Sure.
got to pass. You got to pass this. And
Sure.
Although I've seen some sellers say they didn't care.
Yeah.
I've seen them say, "This is the price I wanted, and if you want it, you're going to pay this price." Even the appraisal was low. And
Yeah.
it's a crazy market, and people do it.
Yeah.
As you well know. Matt Allen, in reverse mortgages, is there a limit on the amount that a reverse mortgage can be? I mean, if I have a $1 million house, or I'm an upper end house, I mean, tell me, or even a minimum, tell me what that would be like.
So FHA, so all reverse mortgages are FHA.
All reverse mortgages.
With the exception, there are some proprietary products out there, but there's very few. I do have
didn't
one
know
proprietary product, but for the most part, they're all FHA.
Okay.
And so the FHA limit, so the maximum claim amount is $625.5, and what that means is if your home appraises for more than $625.5, so you have an $800,000 house,
Okay.
the maximum value they're going to give you is the $625.5, and then the loan amount is going to be based off of your age at that point. So there is a limit.
So there is a limit.
There is a
on
limit.
on that.
Yeah.
Okay, so a $1 million house, I'm not going to be able to reverse mortgage that, and okay, well that's
Yeah,
good. I mean,
I
I guess you wouldn't really need to if you had a $1 million house anyway to do that, right? I mean,
You would be surprised. I've talked to a lot of people that are in that $1 million plus range that are living on just Social Security only.
Sure.
And it's amazing because the $1 million house, the higher taxes,
Sure,
higher
yeah.
insurance, and
Oh, yeah.
thing.
Oh.
But I do have a jumbo reverse mortgage, but it really only makes sense if the home is worth about 1.3 million or more.
Interesting. Okay. Tell me, Dave Sprague, about the luxury market here, or FHA. That limit is how much is that limit that an FHA will loan here?
So maximum loan on it is 279.5
$279.
for the county at this point. So
Okay.
each year they reevaluate it, but right now that's our limit. They reduced it about a year and a half ago. Previous to that, it was at 417.
I was going to say, I thought it was in the 400s. Okay,
Right.
it's come down that much.
Yeah, and that's kind of what it was prior
Okay.
to the Great Recession and all the lending problems, and then they opened things up to try and help people out.
Okay, but that would eliminate then a lot of people, right? Who are going to buy at a higher price are not going to use an FHA loan.
Right.
Then. Okay.
And usually, I mean, again, we've got the conventional products to be able to provide to them with 3 or 5% down, or as little as 3 or 5% down, that
Yeah.
can still get them into that home.
Yeah.
So
What's happened to USDA loans? I mean, my goodness, we used to talk about those all the time, and now
Yeah.
I get with lenders, and we don't even they don't even do them hardly anymore. What in the world happened to that product?
I mean, still a relevant product.
Okay.
As you see lending guidelines loosen up, you're seeing more and more people go back to the conventional loans. That
Because instead of the government loans, they're coming to the conventional loans.
just an easier product. There's less involved. There's less paperwork. There's the guidelines are a little bit looser than the government loans. The government loans are always going to be a little bit tighter. There's always going to be more requirements to get.
So the private sector, like Umpqua Bank, then you made it easier to use your conventional loaning than to go into the government programs.
Correct.
To use. That's what's happened then.
Yeah.
That is really interesting. And
Yeah.
so you can compete with them, but you're beating them.
Yeah.
Well,
No,
the government needs to change those programs then a little bit.
And typically, you start to see that as their demand slows, you see them loosen things up. You may see them say, "Hey, we're not going to have private mortgage insurance for the life of the loan," or "We're going to
Yeah.
loosen something
Interesting.
up to increase our demand." Or
Well, it never, that's how, well, I've never seen an industry as much supply and demand as real estate. I will say that. It truly is, follows that.
absolutely,
And the rental market follows the same thing. I mean, it is.
Yeah.
We've heard from Brad saying that we don't have skilled labor, here. We can't build we're building lots of $1 million places, but we're not building the 200 to 225 and 250 places that seem to go, which has overall in Jackson County, that 150 to 250 price range has a 0.8 month supply of inventory to it.
Yeah.
Things like that, and who's in I think who's in charge of this in our county, what we're building,
Right.
Multiple units. I've asked brokers, if you had $1 million to invest in real estate, what would you invest in? And it's really fun. Some of the answers I've had have been very interesting, but a lot of them say I would in multiple unit housing.
Yeah.
I mean, that's what California's building, and we don't have any of it here. And that's why the rents are going up. Anyway, but nobody's in charge of it, I thought, come to find out in our county, because nobody wants to talk about it, maybe except us on our shows. And we don't have any say. But trying to bring it up, because it's a big issue around us, I think, as we go along. Well, I didn't know. Okay, go ahead.
And I was just going to say, I mean, I think a lot of renters don't realize, there's some misnomers there about how hard it is to buy a home and the requirements of buying a home. And a lot of times that gets caught up in national media talking about the difficulties of lending. And we have a lot of first-time home buyers that are renters that are paying $1,000 to $1,200 a month in rent until we can show them that you can go and buy a house with little to no down payment.
Little to nothing down, and do that.
Yeah.
And, it's true. And try to rent a 3-bedroom, 2-bath place in Ashland. Our rental people, $2,500 a month. Some people are paying for these places, and there aren't any to find. And you want a dog, you got 3 cats and a dog, and want to grow 4 marijuana plants. You're really in trouble in terms of finding a rental anymore. I think, but I don't make light of that. But we just have our supply is just so limited.
Yes.
And so landlords can be picky. Sellers can be picky, and things like that. And we got to get back to that even kind of where the supply and the demand is equal right now. But right now it's just tilted still.
Yes.
And our gap is growing. We're still selling more than are coming onto the market to replace them in the overall market.
Yeah.
But that keeps lenders happy.
We like being
Do
busy.
you see do you do foreign loans at Umpqua Bank? I mean, that seems to be another topic that's all of a sudden we're now discussing with lenders.
Yeah. It's not something that we're doing.
Okay.
The bank kind of likes to stay within its footprint. I mean, there's certainly
sure.
lenders out there that
That
are looking at those options as, you know, people are looking to buy more second homes and kind of go abroad, but
Yeah.
not something that we're delving into as Umpqua. So,
Yeah, well, you know, I didn't believe when they say all the Chinese buyers that are coming, you know, those things as well. So,
Yeah.
but it's here, it's reality. And Matt, we get kind of the last before we get out of here tonight. If someone wants to, I mean, reverse mortgage, they need to come and see you. And I know it's each individual thing, but how can they find you? And I think what you're doing is really interesting. I didn't know that for specific kinds of things that you would be the person to go to for this. Absolutely.
So how can they contact me? Is that
Sure.
Yeah.
I mean, how can they find you?
They can go to OregonReversePro.com, or they can give me a call at 541-773-3131.
And Google you as well and find you in
sure,
there as well at Pacific Residential Mortgage for reverse mortgages. And
Yep.
you know, for some people, I've had clients who got reverse mortgages and then, you know, still lost their short sale their properties because the reverse mortgage was too much, was too high when they originally got it, kind of thing. That was a number of years ago, though.
Right.
That's changed. I'm sure, like all lending has
Yes.
changed. That can't happen anymore.
No.
It just doesn't happen the way it used to, which is really a good thing.
Absolutely.
I think as well. You think 2016? I mean, it's going to be a good year again, isn't it?
yeah, I mean,
I-
you know, outlooks are good, rates are low.
Yeah.
You know, every year we talk about rates are going to go up, but, you know, I think we're still going to be in the fours throughout 2016. You know, people get a little too caught up in what the Fed's talking about or what the Fed
Yeah.
might do, but not as much tied to mortgage rates as people think. And so, you know, I still think we're in for a great year in 2016.
I think you're right. I don't see any change, and I'm always the pessimist. You know, I'm always the one who, you know, I don't think that's true. You're crazy, but I've come around. My thinking has actually changed because everybody who comes on our show, I mean, in all the areas that we talk about in real estate, everything is in this up direction here. Which is, I guess, good and bad, you know, and things like that. We can't have double-digit increases in land values, you know,
Right.
but we didn't this year. You
Yeah.
know, they actually came down, and so getting back to that equal market would help everybody.
Yeah.
And so we'll see what happens. Well, the Rogue Valley Association of Realtors, I know you guys are part of that, and we thank you for coming. We'll do a radio show with you as well, and
Yeah.
we'll continue our conversation about lending and kind of the programs that are out there. Learn more about reverse mortgages. People have lots of questions on it all the time,
Yes.
and I'm a dummy. I can't answer them. I need to have someone like you, Matt, to explain that to certain people who it might fit them as well. Hey, that'll do it for the Real Estate Show here on RVTV. A big thanks to our student crew here at SLU for their support of tonight's program. We could not do it without them. We also want to invite you to join us on KMED AM 1440 every Saturday at 11 a.m. Check out all of our shows at youtube.com/realestate.